Welcome to another Major Market Movements End of the Week Market Review for June 26, 2015. I'm Quad G, and in this video we're covering the FX markets and some commodity markets, and also a touch on the equity markets as well, and the 10-year note. And we're going to go ahead and start off here with the US dollar. We've recently broken above a trend line, and it popped up. It's chopped sideways into what looks like a wannabe triangle, and now we're starting to get what could be a thrust out of that halfway triangle. And I think the market might be wanting to come up here and fill in some of this manic drop that occurred up here at around 96.17 or so. Maybe fill that in, and then there could be another chance of a turnaround and drop back down. So watch and see what happens going into next week. As you can see on the QG3, we do close above the 20 DMA. That opens a pathway up for the price to come up and test the upper Bollinger Band, which is sloping downward and may intercept it up here around the 96.20 area possibly. The weekly does close as an inside key reversal, and that sets a key low there at 93.56, so potentially still very much bullish above there, enough to carry on some follow through up to test the Bollinger Band at least, I think, or fill in this manic move down. The QG3, or excuse me, the EWO here, still right at the 0 line, so not much to glean from that. The RSI, we did hit the 40 and we bounced back up, but we've just come up here to the 50 level, still well below the 60, so just very neutral. And the MACD has opened back up to the upside there on the daily, and on the weekly we're still open to the downside. So US dollar, I think in the short term we may continue to see a little bit more follow through to the upside going into next week, but there is another potential top there as well. I still, from a larger perspective, which we'll go into here in a bit, think that the US dollar is still in a bearish mode, and I don't think we've seen a major turnaround to the upside just yet. I want to see much more upside to confirm that that the downside potential has been washed out. Let's take a look at the euro. All right, so we were expecting 5 waves down, and it looks like it's working on it right now. I don't think it's completed yet. Key resistance there at about 12.20. Much like the dollar, I think there is enough potential for the euro to come down here and test the lower Bollinger Band, which is coming up quickly. Maybe next week here around the 1070 level, maybe 1100 level, somewhere in there is where it may be intercepted and allow for a bounce to the upside. The week does close as an inside key reversal, much like the dollar, and sets a key top there on a weekly basis, that high at 1436. And the EWO, again right there by the 0 line, not much in the way of usefulness there. And the euro RSI is dipped just below the 50. It might be there might be enough momentum to come down here and test the 40. We'll have to wait and see. And the weekly MACD is open to the upside. That's bullish, but the daily is bearish. It's turned over and turned bearish there. So mixed picture between the two. Overall, though, I think the euro is just in a corrective mode. It could come down here to test this lower Bollinger Band next week, but then off of that, the reaction to that could be very telling whether or not we're setting another key higher low, and we'll see another surge to the upside, or if we just test that Bollinger Band and just lay flat and maybe chop sideways, that would be bearish and invite more downside. Let's take a look at the Great British Pound. All right, so the pound here, zoom in. We had an inside key reversal yesterday on the daily, setting a key low at 56.64. But we're not getting any fall through today, obviously. Looks like we're countering with another inside key reversal to the downside. So it just looks like some choppy sideways movement. This may not, the support here may not last with this kind of movement. And so I have to entertain the possibility that this market may slip down a little bit further and want to come down here and test the 20 DMA, which moves up here to around, probably around 56 level, the 56 handle here early next week, possibly. Euro, or the pound on the weekly, we don't get the inside Q reversal. It's just a negative inside week. And, oh, no, go back there to the weekly. And on the EWO, we do have a negative divergence between these two tops here with regards to the EWO. The price has moved up to a higher high, but the EWO is still underneath the previous swing high, so negative divergence between those two. And on the RSI, pretty much the same thing, negative divergence between these two tops. And on the weekly, the MACD is open to the upside on the weekly, so that's bullish. But on the daily, we've closed out. So overall picture for Great British Pound, I know we'll get into the Elliott waves here in a minute. The Elliott waves are begging for another shot higher, and I do think that's still in the cards. And I think we could come up here to give a quick retest of the upper Bollinger Band as it's starting to curl over. Maybe up here at about the 1.6 thousand handle, somewhere in there possibly. But it's going to have to turn around very quickly, very soon to see that. If we drop down much lower and we do actually test that lower Bollinger Band, then that's going to upset the Elliott waves enough to possibly deter that possibility of another advance to the upside. So very tedious spot here overall for the overall picture. We'll get more into that in a moment. Let's move on to USD JPY. All right, so USD JPY, we've had this triangle thrust up, but so far the fall through to the downside is really lagging. It's not producing the downside that you would expect from a triangle thrust up pattern with a reversal. This price action is just continuing to chop sideways in a very neutral fashion. As you can see here in the QG3, we're just closing right there at the 20 DMA yet again. The pattern is neutral. Bollinger Bands have pinched. It's just this market hasn't decided what it wants to do yet, whether it wants to break the previous triangle thrust and cruise on higher, or create some commitment and some follow through to the downside based upon that pattern. So I think we're just in a wait and hold mode here. USD JPY on the weekly, we do get an inside Q reversal, setting a key low there at 122.41. The EWO on the daily, again, we've talked about this negative divergence between this swing low all the way back here in November of 2014. But so far no significant fall through to the downside yet. And the RSI, pretty much the same picture. The RSI has come down here into the 50 level. We tested the 50 and bounced a little bit, but we're very much in this neutral area between the 60 and 40 level. If we get a serious rejection from the 60 level and break the 40, that would obviously be bearish. But a daily close above the 60 suggests there's no going to be probably not going to be any serious resistance there, and could allow a move right back up into the 50-80 or the 70-80 level. And on the weekly MACD, we've closed out in neutral on the weekly, and on the daily we're still in a bearish alignment. So overall picture for USD JPY looks very, very neutral right now, and it's just not giving any firm commitment one way or the other right now. Let's take a look at the Dow. All right, so let's move to the daily here. All right, so the day, just inside positive day, nothing real serious there. Again, we're just in the middle of this very choppy sideways movement. No firm commitment one way or the other. Very neutral. The price action is currently underneath the 50 DMA, that our orange line there. We've got the 20 DMA, which is crossed over underneath the 50. So that's a potentially bearish indication, meaning that currently with the price below the 20 DMA and the 20 DMA angled down, the Bollinger Bands angled down, this just tells me that there is currently the momentum is in favor to the downside. The next key level of support is the 200 DMA, which is this red line here, and currently that's down here at about 17,669 or so. If we see a test of that and no serious bounce, that could be a good indication that this market is maybe ready to break down. The weekly does close as an inverted hammer candle, setting a key high there at 18,188.81, and EWO very neutral. Also the RSI very neutral. MACD looks like it's closed out on the daily is neutral as well, and the weekly on the MACD is open to the downside and looking bearish. So I would say overall, just still a very neutral pattern. No serious commitment one way or the other just yet. Could we have set a key high here and start to see some fall through? Yeah, that's certainly possible. Though this market's just thrown all kinds of curveballs at it. It's full of surprises. And so I'd want to wait and see if this market's going to at least break below the last swing low here, at least challenge it, and maybe chop sideways right around this 200 DMA. If it does that, then yeah, maybe it's ready to actually create some fall through to the downside. We'll just wait and see. The crude oil market. Let's look at the daily here. Crude oil came up, had a leg come down and reversed, and looks like a hammer candle for the day. But the action, you can see the intraday high was capped right there at the 20 DMA, so that's a key level of resistance. And the 3 EMA has closed underneath the 20 DMA, so that's not particularly bullish either. And the weekly, just more inside chop on the weekly. And crude on the EWO right there at the 0 line, nothing to see there. RSI right smack in the middle, right next to the 50 level, still very neutral. And MACD is open to the downside on the daily, and on the weekly we're open to the upside still. So mixed picture there. So still, crude is still very much in this neutral area. There is, the Elliott waves are suggesting that we may have bottomed here with a 5-wave move down and reversal potential. So it may be worth taking a stab at the long side above this key level low at the bottom of this hammer candle, that low being at 58.77. But we'll wait and see until next week into Monday. Get past the weekend and take another look at it. Also, the July 4th weekend is coming up as well, and that's a key weekend for traveling in the United States. A lot of people go on vacations or on because it's a 3-day holiday for most Americans. So it could create a demand in fuel possibly that we could see in the marketplace. All right, let's take a look at the FX markets here. Go away. There you go. All right. So here's the updated bear count for the U.S. dollar index. For whatever reason, TradingView no longer supports intraday candles. For this movement or for this market for DXY, you have to move to they've got another funky U.S. dollar index that for whatever reason has really weird indicators, numbers indicating where it's at. It looks like it's totally arbitrary. I have no idea what that's for. We could take a look at it here real quick if you like. Let's see, create a new one here. So you type in here US dollar. Oh, that's okay. No, that's not it. Yeah, US dollar on CFD. Oh, okay, no space, I see. All right, so in this particular chart, yeah, you can get from FXCM here, you can get right into, the 5-minute scale. But this, what valuation this is, I have no idea. 11,876, just, I have no clue. It looks like it's totally arbitrary numbers that they've just thrown in there. For what reason, I just have no idea. It's beyond me. If you have any idea what this means and like to clue me in, I'd much appreciate it. Send me a line at quadg@majormarketmovements.com. That would be really interesting to find out what that's all about. But anyway, DXY no longer has it, unfortunately. And so we're reliant upon just the daily candles, which isn't really helpful. It doesn't give us much fidelity with counting Elliott waves. However, I do see the potential for this being a wave 1, a wave 2, sub 1, and we're still working on a sub 2 as a 335 contracting flat. This being a 3-wave move up, another 3-wave double zigzag down for wave B, and now a potential 5-wave move to the upside, which I don't think is finished just yet. I think it could still want to come up here to challenge this blue trend line right around say 96.10, 96.20, something in there. And if you remember, we just talked about the Bollinger Bands coming down and possibly meeting that resistance right there as well. So we might get a cluster of resistance right up here, right around 96.20, 96.10, somewhere in there. And also, if this five-wave pattern completes right around that time, I think that might be a fine time to short it again for the potential of a third wave move to the downside. All right. Get rid of that. All right. The euro count, I think it's still pretty much intact. I've rearranged it a bit. Wave one, very similar to the dollar, but just inverted. You got a wave one, wave two, sub one, working on sub two as a 335 flat as well, before a wave three advances to the upside. And right now, key level of support is that blue trend line there, which is right down there at about 1040 or so, 1050. So watch and wait and see how this wave 5 finishes up, which looks like it's just started today. And then key level of resistance is there at about 1218. We see a pop right back above that level. That might confirm that CF2 is finished and wave 3 is started. Now, there's other ways of counting this, of course. And at first blush here, you might think, well, isn't this an ABC count? Yeah, it could be an ABC count. The reason that I don't favor it is because the reaction down from it. If this had been a five-wave impulse down, then yeah, I would be all over this being an ABC count. And we may start a major decline. However, since the drop to the downside from this high looks like only three waves down, an ABC, and not an impulse, um, that makes me doubtful that we've got an ABC here. Instead, the next best bearish count that I can see, or what might favor, is that we've got some kind of A, B, C, X wave, and then another A, B, and C to the upside, for maybe just one more pop to the upside for some kind of double zigzag pattern. That's another possibility that I see as well. But for now, I think we'll watch and see how the market deals with this blue trend line and this five-way move to the downside. If it moves favorably in a bullish direction, then I think it'll be time to jump back into this market and ride it up higher. Great British Pound. Again, this is the preferred count, a wave 1, wave 2, wave 3, wave 4 sharp to the downside. And now, though it's taken its sweet time, we have broken above the short-term orange trend line, and we've just kind of chopped sideways. So even though the rest of the picture, which we've gone over, doesn't look overly bullish, and we do have that negative divergence in the oscillators between these two highs here, I'm still gonna give this market the benefit of the doubt, this Elliott wave pattern the benefit of the doubt that we could still see another leg higher. But I'm going to want to see it happen fairly soon, very early next week, say on Monday. Come up and break above that 5801 key resistance level. Failure to do that, and we just kind of continue to meander sideways and show us weakness, I think that's just going to invite another leg down if we see that kind of attitude in the market. USD/JPY. Here again, we've got this triangle thrust pattern that look really nice, but we're just not getting this reversal. It's just not happening. Folks, it's just not happening. We got 17 days to the upside and currently 15 days just down and sideways a little bit. And it just refuses to drop. We've got basically 2 more sessions to see this market come down here to 119 or so. And it's maybe it's the Bank of Japan, pulling its dirty tricks or whatever. I don't know. but it's just not performing. So we may be reducing the position or maybe backing out altogether if we don't see any significant fall through to the downside, say on Monday, that may create some encouragement. Now, can this reversal extend beyond 15 days or 17 days? Yeah, it can. It's just when it does that, you're reducing the probability of producing a major top here with the triangle thrust. It could be that this is just an A, B, C to the downside before another move higher. That's another possibility if we don't get the quick reversal all the way back down here to 119 or lower, which so far is not shaping up to work that way. Okay, let's move along. Let's go to crude oil. All right, so here's crude. It does look like maybe CF2 did finish today. We did have the hammer candle on the daily, as you can see here. Again, hammer candle on the daily. Oh, it's bogging down. It doesn't want to move. Hammer candle on the daily, and also on the 4-hour chart, we get an inside double key reversal on the day as well. It's setting a key low there at 58.76. So I think also I'm going to move in here to a 15-minute chart. Maybe. All right. And so far, off of that low that we set back here, that low at 58.76, it does look like we've got a 5-wave pattern to the upside. 1, 2, 3, 4, 5. So that's encouraging. So I think that we may be working on a 3-wave pullback here. And we think we may get one more drop early next week, maybe down here into the lower 59 level. And that would be a good end to a wave 2 pullback, and then before a wave 3 to the upside. And that, of course, is back out to that 4-hour. That completes wave C of 2, and we may finally see a wave 3 of 5 to the upside, finally taking on that 67 level that we've been talking about for a long time. Of course, key resistance to confirm that we do in fact get the needed reversal is right there at 61.57. And also that purple trend line there has been tested 1, 2, 3 times. So another wave up should be a rule of 4 breakout as well. So, and then I also showed you last week the cup and handle pattern. This pattern here definitely looks like a cup, where this is the handle portion of the cup, and the purple line is basically, well, the rim line actually is probably more suited to be back here. So the rim line is up here right around 6180 or so. And if you take 6180, the rim line top, and minus the cup bottom, come on, get the cup bottom there, and which has a low of 56.51. So 6180 minus 56.51, you get a potential of $5.29, or let's just call it 530. So tack 530 onto the top of the rim line at 61.8, and you come up with, golly bee, look at that. It produces a target of $67, right on the money. So I think that's all very encouraging for the 67 target being finally touched. All right, so let's move on to natural gas. Go away. All right. So natural gas, oh boy, it's just doesn't want to play. natural gas does not play well with others. It just doesn't. Um, so we've come up here. We're testing this blue trend line here a third time, and we don't have a real a nice looking impulse to the upside at all. It looks like three waves. Are we going to see a rule of four breakout? Maybe. I think a key level of support right now in this very short term is this orange trend line. I'm willing to give it a little bit more time to the upside if we can stay above that orange trend line. However, break below that, and especially break below the last swing low here at the suspected wave two, and then yeah, it's time to back out yet again and wait and see where this market wants to go. However, break solidly above that blue trend line and this current little swing high here at about $2.58 or 85 cents, excuse me. We could see finally get our breakout and run to the upside up here to $3.10 for starters. Um, Here is the 10-year note on the long-term chart going all the way back here to the year 2000. Now we've seen this ending diagonal. Looks like a nicely formed ending diagonal that's finished. It took 12 and a half years to finish that, ending here on the middle of 2012. And over the last 3 years, we've been working on this downside and sideways movement into wave one and wave two. Now, wave two does look like it's finished, and I think wave three is ready to take the plunge. And of course, just like all ending diagonal dynamics, in order to form a major top here, we need to see a reversal that retraces all the way back down to the origination of the ending diagonal, right down there at the 93 level. We need to see a five-wave move down, impulsive move down that uh, preferably moves down faster than the amount of time that the ending diagonal took to form. So we need to get back down there to 93 within, well, we've already scubbed off 3 years, so we're looking at another 9.5 years to get down to that level at least. Could certainly go further than that, but that's my current expectation, to see a five-way move down to 93 and within the next 9.5 years. I think it'll accomplish that much sooner. Here's a zoomed in count. Let me back up here. Here's that wave two that finished. And now we've got a wave one, wave two, sub one, sub two, sub one again, sub two again. And now we're prepped and ready for a point of recognition collapse to the downside. Especially while we're below this current wave two. Break above that wave two, and then, yeah, the count's busted, and we could see a short squeeze to the upside, and possibly dismantle the count all the way back here to this wave two, potentially. So very critical point in time. I think next week we need to see some major fall through to the downside to see for this count to come to fruition. All right, so here's another market that's gotten very interesting lately, especially this week. It's the agricultural market, the commodity market, primarily the grains, corn, soybeans, and wheat. DBA is an agricultural weighted index fund, and it has a lot of different um, commodities that make up its basket, but the grains are a big portion of it. And you can see that DBA here closes the week, we're on the weekly scale, closes as an inside double key reversal, setting a key low there at 2170. So I think as long as we're above that level, I think we could come up here to challenge this orange trend line and maybe even bust it. So, and a bust of that, I think, could create a short squeeze to the upside. So, a very key spot here, movement that has some promise of um, a potential significant run to the upside. And we'll go in a little bit more depth here on the grains. Here's corn. This is the major long-term chart. Way back here in 1974, when inflation was running amok, as we were coming off the gold standard, and we, had the Middle East oil crisis and all that stuff. Um, we were forming this major run-up from, let's see, corn was trading at basically about 104, and it zoomed all the way up here to about 401. So maybe a threefold increase in the price for a major run into wave one. And then from that point, it basically cooled and went sideways for a long time for an ABC move for a wave two flat. And then into about early 2000s. And then ever since that early 2000 and that major US dollar top, the price has been going back up and trumping even the crisis of the 1970s and with inflation and what have you. Um, and since then, if we zoom in here, I do think we got a leading diagonal wave one, and we've over the last few years we've created an ABC. Looks like a 5-wave move to the downside for a 335 flat potential. And if we zoom in here a little bit closer, let's go to the daily. It looks to me as though we've got a wave one, a wave two flat, wave three to the downside, wave four sharp, wave five looks complete. Now, the only thing about this chart that I really don't like, but might have to completely ignore, is the fact that this move up out of wave five looks like only 3 waves up, an ABC. But so far, since that ABC up, we've got an ABC down, and now we've got this very interesting pop-up this week. And if we go to the weekly chart, you can see it's just this very strong, impulsive move to the upside, engulfing candle, then engulfs the last several weeks of sideways trending movement. And where that orange trend line has been tested once, twice, 3 times, 4 times, and now a 5th time. So we're increasing the likelihood of a breakout here. So with that all said, I think it might be worthwhile to um, chalk this up to being maybe an initial impulse up, though it doesn't look like it. It's less than ideal, that's for sure. And maybe attempt a long side move here. I think we could see a little bit dip down out of this to fill in some of this manic surge to the upside this week. Maybe a dip down, maybe give us a good entry. If that's true, key level of support is going to be right here at, oh, it didn't move. It moved, darn it. They're at 352. So want to see the price come back a little bit closer to that level before attempting an entry, just to reduce the risk. And also soybeans. This is an old count that I've been tracking ever since November. And basically I've been waiting for a confirmation of a reversal. And it looks like we got it today. We got this this break above the last swing high here, and it looks like we do have maybe a 1, 2, 3, 4, 5 waves to the upside. Today's movement was an inverted hammer candle, as you can see, so that may have completed wave one, and we may see over the next few days, going into maybe middle of July, a 3-wave pullback into wave two. possibly a right shoulder as well, as this being a left shoulder, left neckline, head, right neckline, and now possibly a dip down into a right shoulder. So there again, we'll be watching for a potential that potential three-wave moves to the downside, that action, and then maybe look to get long there too. Actually, with my plate being so full, I'm probably going to just pick one of these grain markets, probably going to lean towards corn, then soybeans or even wheat. If you if you would prefer soybeans over corn or wheat over corn, again, just let me know what your preference is, and if I get enough interest in one market over another, then maybe we'll just go that route. But I think all three grain markets could be set up for a nice run to the upside as well. I haven't pulled this out. I actually don't have the long-term soybean chart here. I have to touch on that later. We're getting long in this video. Wheat, again, yeah, we see this this big engulfing candle to the upside here. I think it could come up here to test this orange trend line soon. You can see that it's been tested once, twice, three times, and this would be like a fourth time if we do that fairly soon. So we've come up here, and then we bounce kind of sideways and down, forming a bull flag. Then that would be our best indication that we're going to pop higher and maybe come all the way back up here into the the 900 to say 940 level, potentially challenge this last major swing high. All right, so watch. I'll be looking for, maybe not today, but early next week, I'll be looking to create some setups in the grain markets, probably corn, unless I hear much from you about the other markets, soybeans or wheat. All right, so that's going to complete our market overview for this week. Hope you all have a great weekend, and we'll be talking to you later. Adios.